Ask 10 people what technical analysis is, and you will get 10 answers, several of them suspicious. This is Chapter 1 of the Technical Analysis module, and by the end of it you will have a plain definition and an honest answer to the charge that charting is just astrology. So let us define it plainly. Technical analysis is the study of price movement, using charts of past price and volume to judge where price is more likely to go next. It is about judging who is winning, buyers or sellers, by reading the chart itself. Here is that chart up close. Price and volume, which is supply and demand drawn as a picture. And here's the core idea. It ignores earnings reports entirely. It reads only two things. Price, where buyers and sellers agreed, and volume, how much conviction was behind it. Out of that come three core beliefs. 1. Price already reflects everything known. 2. Prices move in trends that persist. 3. History rhymes, because crowd psychology repeats. Technical analysis is the study of that picture. Supply and demand, drawn as a chart. At its core it asks one question over and over. Who is in control right now? And is that control strengthening or weakening? Everything else in this course is a different lens on that single question, which raises the obvious comparison. The two disciplines study the same market through different lenses. One reads the price, the other reads the business behind it. Two lenses, one market. On one side, the candlestick chart. On the other, the institution that issued the stock. Technical is the price action on the chart. Fundamental is the business behind the stock. Set them against each other and rule off the comparison. Technical studies charts, volume, and patterns. Fundamental studies earnings, debt, and management. Technical answers when to buy, sell, and exit. Fundamental answers what is worth owning in the first place. Same market, different questions, and this course teaches the technical side, which is the timing. They are not enemies. Plenty of successful investors choose what to own with fundamentals and decide when to act with technicals. But for active trading, the chart is the primary tool, because only the chart tells you your risk and your reward in advance before you commit a single dollar. So why does reading a chart work at all? Skeptics enjoy calling charting astrology for traders. It is a fair challenge, so here is the honest answer. There are 3 reasons it has staying power. 3 of them, side by side. 1. Prices trend. Assets in motion tend to stay in motion. A stock drifting higher for weeks more often continues than reverses on a dime, and trends persist longer than random chance would allow. 2. History rhymes. The same chart structures recur across every market and every era, because the human reactions behind them, fear, greed, hope, and regret, never change. 3. Big players leave tracks. Institutions can hide their intentions, but not their footprints. Sustained buying, which is accumulation, and sustained selling, which is distribution, show up as volume and structure on the chart, whatever the press release says. Trends, repeating psychology, and institutional footprints. All of them readable on the chart. But there is one thing technical analysis is definitely not. Technical analysis is an art, not a science. No pattern, no indicator, and no setup works every time. Professionals think in probabilities. Look at the results over many trades. An equity curve. Winning trades, losing trades kept small, and the account total climbing. And here's the core idea. No pattern wins every time. It just wins more than it loses. Every loss is kept small, and the edge shows over many trades, not over any single one, which makes 2 phrases red flags. This pattern never fails. And guaranteed signals. A promise of certainty is a sales pitch, not analysis. Anyone promising certainty is selling something rather than teaching you. This mindset shift is the hardest part of the whole course. A single losing trade means nothing if your process is sound, and a single winning trade means nothing if you broke your rules to get it. Technical analysis gives you an edge, not a crystal ball. And an edge only pays off with discipline and sensible risk, which is why a whole later module is devoted to exactly that. You just finished Chapter 1 of the Technical Analysis module. Technical analysis reads price and volume to judge who is in control. It answers when rather than what, and it deals in probabilities rather than certainties. Thank you for watching Trendly Lab. Next up, Dow theory. Market trends, uptrend, downtrend, and sideways, and the century-old framework that first explained them.